This is Bazaar Morning Call, broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. Starting a new week this Monday morning, we are coming to you live from the CNBC TV 18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Sonia and Surabhi is with us as well. Guys, hi, morning.
Good morning.
Hi, good morning. It's the start of a brand new week and looks like the bulls are, tightening their grip a bit on the market, although it's been really range-bound last week. Let's see how things progress
They
today.
got battered quite badly on Friday. I'm hoping with all the green on global screens, they'll want to make some sort of a comeback today, Prashant.
You know, somebody on Twitter, I don't recall what the handle was. So that is last time when Jackson Hole happened, after the Jackson Hole market rallied, and you said, I don't remember. You said I said. The gentleman pointed out that you said Jackson Hole up bull. So what are you going to say now?
I guess that sounds enough today.
Somebody's, but I mean, it's.
Maybe it was off camera.
I don't know. I mean, but
It sums it up. Whatever it is, Prashant, just say it. They say it's you.
I said it. All right, let's just quickly tell you what you need to know. Basically, Friday was bad, but this morning it's not that bad. Take a look at what we did on Friday on the Nifty. We made a new low, right? So the low, which is 19,253, the low the week before, that was broken. And we kind of ended, we were below that particular level. We broke intraday and then kind of ended around that. Now, global cues, right? So this is a Friday session and that's got some bearing. But the point is global cues have turned around. They're looking up a little bit. So they're positive. The NASDAQ, for example, ended about 0.9% or so. And the reason is that the Jackson Hole Symposium, over Friday, then over the weekend as well, because it was running through to Sunday, did not throw up any fireworks. There were no great surprises coming out of there. So if you focus on the one big speech, the address, which is Fed Chair Powell's address on Friday, well, he said hawkish things, he said dovish things. On the whole, it was quite neutral. I mean, there wasn't very much for the market to take away in terms of to change its mind or reprice what they think the Fed will do, etc., etc. So in that sense, it was quite neutral. It's not moved market pricing in any significant way at all. So, you had the 10-year, which is still trading at about 4.2%. So it's neutral, right? I mean, it's not as if it is dovish, so yields climb down or anything. It's still there, unchanged. The 10-year on Friday was unchanged at 4.2%. The dollar index is still slightly, just a tad above the 104-odd levels. So that's the U.S., right? So not really very big or meaningful cues out of what happened, but nothing negative as well, nothing hawkish as well. China Sunday actually, yesterday, cut stamp duty on stock trades for the first time since 2008. And I believe the Chinese stock markets are rallying. And why not? I mean, the last time China cut the stamp duty in 2008, the next day, the Chinese index, the CSI 300, rallied almost a full 10%, one day. And I think I believe Chinese stocks are up 5% now. It's basically, the government at the margin trying to boost stocks, lift sentiment, etc. And this comes after, some help that the government announced on the mortgage side, which was last Friday. So keep an eye out on this one because, when we talk about flows, etc., that's the most kind of relevant market that you kind of compete with. Now, the setup on the Nifty, in terms of levels, etc., doesn't change very much. The averages have changed. The resistance on the Nifty is still at the 20-day moving average, which is 19,490. And I would say we're not very far away, but I would still look for the Nifty to stabilize around this 19,200 kind of level. Intraday, we got very close to those numbers. There's a falling kind of support line, 3rd of August, 14th of August, and then 18th of August as well. And I think we kind of almost did not touch that line, downward sort of falling line, the support line, but almost we got to that and then bounced. That's why I'm saying around 19,200, I would kind of look for supports on the Nifty. Now, while the Nifty broke the low on Friday, the Bank Nifty did not. And we've been pointing this out that the Bank Nifty perhaps has been the stronger of the two indices for the last 3 or 4 trading sessions now. So Bank Nifty closed in the red on Friday, but it did on a week-on-week basis manage a positive weekly close. Support for the Nifty Bank does not change. That stands around 43,600 because that's not been broken. That's still valid. On the way up, the 20-day moving average for the Bank Nifty stands at 44,575. For the last 3 or 4 days, actually almost all of last week, the advice has been to kind of stay clear, stand away, and see what the market wants to do. Now with Jackson Hole, etc., behind us, perhaps, I mean, I think one should feel a little more confident to kind of enter the market, take trades, etc. But best done if you do get a slight dip closer to 19,200 on the Nifty. And maybe a little lower on the Nifty Bank as well. That will put you in a sort of decent kind of position instead of trying to chase the open, because on the upside, I mean, there is still no reason, at least in the very near term, for the market to start to run away or anything. So the best kind of strategy would be to look for dips intraday, etc., and try to get in with those kind of levels on both the Nifty and the Bank Nifty in mind. Sonia.
Absolutely. And the thing is that the Nifty is still down about, 3.5% from its recent highs, right? Yeah. So there's a lot of ground to cover. I think give and take everything, the market has been very, very range bound. I agree that there are very strong global cues this morning. The Dow is up about 250 odd points, was up to 50 points on Friday. So in that context, the global cues are strong, but our own markets have been so range bound between 19,200 and 19,500. Every time we get to the lower end of the range, there's buying, and every time we get to the higher end of the range, there's selling. So in that context, now, the buying action perhaps could emerge, as Prashant was also pointing out. But there are a couple of levels to keep in mind. On the upside, though, the resistance still stands firm at the 50-day moving average and the 100-day moving average, around 19,400 or so, the levels on your screen. The big problem really is the Bank Nifty, right? So while the Nifty is down 3.5% from recent highs, the Bank Nifty is down almost 5% from recent highs and is down about 3% in just the last 1 month. So that is the index which continues to be unable to provide support to the market. Until there is no recovery in the Bank Nifty, the trend perhaps in that pocket will continue to be a sell-on rally. The other thing I want to watch out for is the domestic economy-facing stocks. So if you just map out what's happened in the month of August so far, Hero MotoCorp, SBI, Britannia, HDFC Bank, all the stocks that have a domestic economy-facing tilt are down and out. So is the consumption pattern slowing? That seems to be the narrative that's picking up as well. So just keep an eye out on that. Apart from that, of course, a lot of cues that we'll talk about in greater detail. But just to look at what's been happening with the global setup, the bulls have taken a back seat. I mean, just look at the kind of losses that we've seen in the month so far. So it looks like it's going to take some time for them to sort of climb back.
Yeah, absolutely. And I guess, Sonia, that's a question at least I'm asking myself, that the equity market perhaps preempted some of the hawkishness that we saw from the Fed chair, right? Because the US markets are down anywhere between 3% to 5%, depending on which index you're looking at. The Nasdaq's, by the way, fallen the most in the month of August. So you can argue that equities kind of have been pricing in this new reality of, sticky inflation and maybe one more rate hike. So that's the picture across Wall Street over the month of August. The issue is dollar and yields, because despite the equity rally on Friday, the DXY continues to be above 104. Let's pull up the dollar index. Yeah, it's there on our screens right now, 104.11. Cooled off a little bit from the Friday highs, but it's still, at the highest level since the 1st of June. Yields, they've actually cooled off very significantly just now. It's 4.23 once again. It was about 4.25 when I checked a couple of hours ago. But the issue is that yields are still elevated. Yields didn't collapse in a hurry or rejoice in a hurry after that Jackson Hole meet. So we need to see if, indeed, this is entirely priced in. The fact that maybe there'll be just one more rate hike and then the Fed is done. That's still a bit of a question. Just to come to our markets, Sonia's already been pointing out the levels. So we did close below the 50 DMA. So the idea is probably we'll see some sort of a attempt of a pullback today. The only problem is the huge amount of open interest buildup that's happening at 19,300, 19,400, 19,500. That's where the call writing is very, very aggressive. In fact, the outstanding open interest there is in excess of 1 crore on all these three strikes, 19,300, 19,400 and 19,500. So they will be acting as a bit of a resistance. The key events. Now, just to point out, today, of course, we'll spend a lot of time talking about the Reliance AGM. The stock has underperformed. It's been very, very range-bound, done about 2.5% in August so far. But the market has great expectations. It's looking out for more clarity on what happens with Jio Financial Services, what's the roadmap after the BlackRock announcement on the mutual fund side, and also more clues on Reliance Retail. We know about the constant sort of fundraise, the top dollar valuations that part of the business is getting. But what about value unlocking? Will we get something more on the roadmap, potential listing timelines? That will definitely get the market very, very excited. Also, watch out for the fact that tomorrow is another important market event, because the Supreme Court takes up the Adani Hindenburg matter once again tomorrow. Remember, late Friday, SEBI submitted its report before the Apex Court. The Apex Court will be hearing that matter come tomorrow. So that'll also sort of weigh on the market's mind. Finally, for today, let's not forget that rice stocks are going to be in focus because the government, I mean, we saw it with onions. Now it's happening with rice. I think when we went to the weekend, was parboiled rice was the talk. Now the talk is basmati exports. Not a complete blanket ban. There's a threshold they've announced, but I think rice stocks kind of give an indication of the government's thinking as well. They really want to clamp down on inflation.
You know, on Reliance, right, BofA Securities put out a very interesting note where they said generally an AGM is not the place to announce any timelines for IPOs. It never happens, so don't have those high expectations this time around. But yes, of course, any talk on, what's happening with the energy business, deleveraging, any other potential collaborations, etc. But don't keep your hopes high, is what a lot of the brokerages believe.
Well, that's the secret of surprise and happiness, right? Expectations.
Life in general.
All right, well, let's just, that's the clock which is ticking down to the AGM speech, which is at 2 o'clock. Well, let's quickly, before we go any further, tell you what's lined up in the first half hour of the show today. We will get you updates from markets across the globe. Ed Yardeni of Yardeni Research will join in to discuss the global setup. Our research team, after that, will get you CNBC TV 18 list of top 10 stocks for the day. And at 8:30, we will have Prakash Diwan joining in to talk about all of the news flow which has been coming through from over the weekend, and of course things that he would like to bet on from here.
Okay, well, the implied opening for now is up about 50-odd points. So it looks like we're headed to a good start. We'll take it from there. On the equities front, first up, Pramod Amte of InCred says that Q1 FY24 has started with strong order inflows for the capital goods sector. States capex uptake and home loan growth reiterate their investment theme of housing and capex infrastructure sectors. He adds festive season-led recovery, aided by easing interest rates in the second half, will be the key drivers to watch out for. Considering the sharp run-up in mid-caps, they've removed KEC International and Kajaria Ceramics from the high-conviction stock idea list and introduced KEI Industries and Thermax. They've also downgraded Astral, Crompton Greaves, Cummins, Century Plyboard, HDFC AMC, HUL, Marico, Persistent Systems, SBI Life and Sun Pharma. That's a long list of downgrades there.
All right, well, we'll talk more about that, but let's get you some money market views as well. On the rupee, we have B. Prasanna of ICICI Bank, who says dollar continued to remain stronger as probability of another rate hike increased after Fed Chair Powell's marginally hawkish message at the Jackson Hole Symposium. However, rupee remained resilient, helped by RBI's intervention and inflows in equity market. Further, the People's Bank of China's aggressive fixings and interventions help Chinese yuan to stabilize, helping Asian currencies. He expects rupee to trade between 82.2 to 82.9 this week.
And on the bonds, B. Prasanna of ICICI Bank says global markets remained in consolidation phase as the incoming data was largely in line with expectations. Back home, the MPC minutes were released, which clearly demonstrated members' intent to look through recent vegetables-led inflation. He expects a gradual downtick in yields with an improvement in systemic liquidity and the benchmark 10-year yield to trade in a range of 7.1 to 7.20%.
Okay, plenty of stock-specific action to track as well today. We'll get to it in just a bit in our top 10 segment. Today we're looking at Linde India, BEML, Bharat Electronics, BHEL, Industar Capital, Indian Bank, Jio Financial Services and Amber Enterprises on the back of positive news flow. Paytm and NBFC stocks could perhaps open in the red. We'll tell you why in just a bit.